question 5, exercise 1.3. So the way I'm going to do this is I'm going to just, as I said yesterday, just lay it out very clearly on my page. I'm going to write down the information we're given to start with. So Sally, her gross salary is 94,500. She has a standard rate cutoff point, standard rate cutoff, which we sometimes call SRC. The standard rate cutoff point of 34,000. And she pays tax at a standard rate of tax is 20%, and the higher rate is 40%. Her tax credit is 2,450. So how I'm going to do this is, I have all that information now. Ty, yeah.
Is gross tax before or after the tax credit?
Before the tax credit. Yeah, good. Okay, so I'm going to draw out a little picture. Some people find this helpful, other people don't, so just if you don't find it helpful, don't use it. The total salary here, the total gross salary is 94,500. So that's her total gross salary. Her standard rate cutoff point is 34,000. So her standard rate is 34,000. So 34,000 there. And that's taxed at 20%. So her standard tax is 20% of 34,000. Okay, which is 6,800. Is it? No, 6,000. Yeah, 800. Okay. Now this is the bit where people get confused. So when we come to do the higher tax is at 40%. It's on whatever hasn't been taxed already. So she had 94,500. That's her gross. She's been already taxed now on 34,000 of that. So I'm going to take that 34,000 away from 94,500. And she's going to be taxed now at so this is the standard tax rate, standard tax. This is how much she's going to be taxed at the higher rate. She's going to be taxed on 60,500 is what's left that needs to be taxed at the higher rate. That's the bit where people tend to go wrong. So when I'm marking exams or whatever, some people, they find the standard tax, 6,800, and they just subtract that from 94,500 and then find 40% of the rest, but that's incorrect, okay? You need to just subtract your standard rate cutoff point from your gross salary, and the remainder will be what is taxed at the higher rate. Okay? So her standard tax is 6,800. Her higher tax is going to be 40% of 60,500. So what's that going to be? 40%. So 10% to be 6,050. So what is it? 2, 4. I'll just use it on I couldn't find my calculator either. That's why I didn't have any chocolate. Disappointing. But anyway, 0.4. Remember we said you could also do it as 0.4 times 60,500 if you want. 0.4 times 60,500. So 24,200. Wow, that's a lot of tax. So she is paying 6,800 in standard tax, and she's paying 24,200 in higher tax. So her total gross tax is 6,800 plus 24,200, which is 31,000. So she's due to pay 31,000 in tax, which is nearly a third of her salary. It's rather a lot. Anyway, so that's her total gross tax. Her tax payable. Now her tax payable, remember, so here she is. She's been given 94,500. She's giving to the tax person She's being given to the tax person. She's giving 31,000. And then this is the tax man. The tax man now is going to give back to her her tax credit, which is 2,450. Okay, so she is due to give the tax man 31,000. She's giving that to him, and he's giving back to her 2,450. So I'm going to subtract that 2,450 from the 31,000 to get my tax payable. So that's going to be 28,000. So her net tax payable, in other words, the actual amount she gives the tax man is 28,550. And her net pay then is your take-home pay. So net pay means what's left to you after you've paid your tax and the tax credit's been dealt with and you've paid any other charges. So her net pay is going to be her gross salary minus her tax payable, which is 94,500 minus 28,550. So 94,500 minus 28,550. So 65,950. That is her take-home pay. So that's what goes into her bank account and the money that's now available to her to use. Any questions on that, or is it beginning to come back to you from junior cert, or beginning to make more sense now? I know if you did ordinary level at junior cert, it wasn't as complicated as that. Okay, I think there was probably a standard rate of tax and no higher rate. But please ask me if you're not sure. Ask me if you want me to explain something. Question 2, they're just really checking your understanding on page 11. So Abdul earns €33,000 per year. His tax bill for the year is 6,930. So basically, they're not telling you what rate he's earning at or anything like that. I wouldn't worry about that, because all they're wondering is what percentage of his income he's paid in tax. So, for those of you that are not so keen on percentages, what percentage of his income is paid in tax? So, I don't know whether this helps you. This used to help me. What percentage is one number of another number is divided by of multiplied by 100. So what percentage of his income is paid in tax? So it's going to be his tax. What percentage of tax over income? What percentage is his tax of his income? Is his tax of his income? So it's is over of, tax over income, times 100. So 6,930 over his income times 100, and that will tell us what percentage of his tax, of his income is paid in tax. So 21%. Any questions on question 2? Okay, question 3 then. I don't know whether this is NASA or Nessa, because we call her Nessa. So, Nessa's bill, tax bill for the year. Now, so now they're really just messing with your heads a bit. Nessa's tax bill for the year was 6,300. So that means her tax that she paid was 6,300 euros. Her tax credit was 1,300. Tax credit was 1,300. Her gross income was 38,000. So 38,000 is her gross income. And she paid tax at the standard rate only. So standard rate of tax only. Okay? How much was her gross tax? So the first question says, how much was her gross tax? So it might help to go back here to see that her tax payable, if you remember over here, was her gross tax minus her tax credit. So let's just write that up here. Tax payable equals gross tax minus tax credit. Okay? Which means that her gross tax must be her tax payable plus her tax credit. In other words, how much was she due to pay before they took the tax credit off it? Okay? So, if I know her tax payable, that's 6,300. And I know her tax credit is 1,300. Her tax, if I add those two together, hello? Was there anything I needed to do? No? She just dropped something in? Okay, thanks. Thank you, Rosalind. So her gross tax is tax payable plus tax credit, which is 6,300 plus 1,300, which is 7,600. So she was due to pay 7,600. That was her gross tax. They took off her tax credit, and she ended up paying tax payable 6,300. What rate did she pay tax at? So she only paid tax at the standard rate. So what they're asking is, how much of her salary is her tax? A bit like question 2. What rate did she pay tax at? So her gross tax was 7,600, and her gross salary was 38,000. So what they're asking is, what percentage is her tax of her salary? Okay, what percentage is her tax of her salary? So that's again her is over of times 100. So is her tax 7,600 of her salary 38,000 times 100? That looks like a fifth. So 20% was the tax rate. Yeah, hi.
Why is the tax credit added,
Up here.
Yeah, would the tax credit not be part of it because it wasn't taken off?
So, yeah, that's a really good question. So why is her tax credit added to her tax payable is what you're asking, yeah? Okay, so if you remember, the tax payable is what happens when, it's the amount of money you actually end up giving.
Yes.
Yeah? So she was going to hand a certain amount to the tax man.
Yeah.
He then handed her back 1,300, and he was left with 6,300.
Yeah.
But if he hadn't given her that 1,300, that was the amount she was supposed to pay. The 1,300 was kind of a gift back to her of her own money, yeah, that he said she didn't need to pay.
Okay.
So she should have paid him, if there were no tax credits,
Yeah.
she should have paid him 7,600.
And that's the number you're looking for?
Yeah, that's the gross tax before any tax credits.
Okay.
That's what, if there's no tax credits, that's what you would give the tax man.
Okay. So the tax credit comes at the end?
Yeah, and yesterday I was just saying, when you're doing a normal one, like over here, this question here,
Yeah.
you could deal with the tax credit when you want to deal with it. Now, actually in this question, we dealt with it early on because they looked for our tax payable.
Okay.
So we had to actually take the tax credit away from the gross tax early on. to work out the tax payable. Sometimes you don't have to do that until the very end, it's up to you. But in this one we have to. Yeah, so basically what they're checking there is that you understand the difference between gross tax and tax payable, and realise the amount of difference between them is your tax credit. Does that make any sense?
Yeah.
I kind of imagine this little cartoon going on in my head, where I'm paying my tax to the tax person and they're giving me back some money. Like when I draw that, that's actually what's going on in my head. So I don't know whether that helps. A little bit maybe, yeah. Okay.
Tax bill, like after the credit is like taken out.
Yeah, very good. Tax bill is like tax payable.
Okay, and then is tax payable different, or is tax payable just only the tax and not the credit?
No, tax payable and tax bill are the same thing. So tax bill equals the tax you have to pay at the end. Okay, so it's the actual tax after your tax credit has been dealt with. Okay, those are good questions, thank you. Was there one more thing for Nessa? What rate did you pay tax at? Where are we at? We have probably just enough time. Do you want me to do one more question? Anybody got a suggestion? I can do question 4 because it's a working backwards one, or I can do a PRSI USC one.
Can you do 4, please?
Yep, 4, great. I was hoping you'd say that. I don't like the PRSI ones. I'll do the PRSI USC one and put it up on a video, okay, in case some of you are working through that. Okay, so question 4. Lorraine and Jer had a net income of 60,400. So you can choose to be assessed jointly with your partner, so that's what's happening here. They paid tax at the standard rate, which amounted to 14,700. So this is their gross income, standard rate of tax. We don't know yet, but standard tax was 14,700. They had a combined tax credit. So this is the tax payable by the looks of it. Tax payable. That's the amount they actually paid. They had a combined tax credit of 3,600, and they're non-statutory deductions. So that's things like union fees, health insurance, non-statutory deductions. Statutory apparently means in law. So things like your PRSI are in law and your USC are in law. Your non-statutory apparently are things like, as I say, like union fees or health insurance or something else like that. So the non-statutory deductions were 2,000. How much was their combined gross pay? Combined gross pay. So that's what we have to find. So they paid. Do they not tell us what their? Oh, they net income. Sorry, net income. Okay. So what they're telling us is they paid tax of 14,700. That was after their tax credit was taken off. So if we add the tax credit back onto that, their tax credit was 3,600. If I add those together, 18,000. That's what they should have paid in tax. So their gross tax should have been 18,300. Their non-statutory deductions, so that was also taken off. Okay, so that was another 2,000 that should have gone back on. So 0, 3, 10, and 20. Okay, so 20,300 was the amount that they gave to the government or to their union or whatever. Those are the total. That's the total amount of their deductions. So if they hadn't made those deductions, then their gross salary, which is before any deductions are made, their gross salary would have been their net income, so what they ended up taking home plus their total deductions. So these are all working backwards. So their net income is 60,400, but they gave to the taxman and others 20,300. So their gross salary was 80,700.
I'm trying to take away the tax credit instead of adding it.
I hope not.
In the book.
Is that a different answer to the book?
Yeah. You meant to take away the tax credit from the pay tax because you get the tax credit, and then you add on that to the 2,473.
Okay, let me check that. I'll see whether I've gone wrong or whether the book's gone wrong. It could be me, I agree. Okay, so thank you very much, people. I'm